Hello, everyone, and good morning. Marnel Garconel here with Vera with Meadowbrook Financial Mortgage Bankers. So we wanted to take the time and just highlight a couple of things. So how many times have you heard of your friends talking about interest rates and mortgage rates and saying, my friend got this or my friend got that? How come I haven't been able to get that? Well, that's what we're here to talk about today. So Mike.
So, me and Marnel were talking this morning, and he was asking me what is the most common thing you've been asked lately with our new business coming in. And I see it time and time and again, and I figured we should address it. But every time I have a new client in, we're getting to know each other, we're building our repertoire, and one of the first things I hear is, well, my Uncle Bob or my friend a couple years back got this loan, this rate, and this is his monthly payments. And I hear it all the time. And what people tend to forget is that every single loan is going to be completely unique for every individual. There's a lot of factors that people forget to realize. The product, the time, the housing market, the interest rate market, the 10-year treasury bond. So many factors that make your situation when you're getting a loan different. You see, my loan is not going to be like Marnel's, and Marnel's loan is never going to be like mine, even if we did it in the same month.
Nothing is a one-size-fits-all when it comes to mortgages at all. And that's the first thing. It's almost like buying a car, right? You buy an expensive car, it could very well be the same in terms of a monthly payment as a person with a cheaper car. Now, why is that? It has to do with the structure of that person's loan versus what that other person put down in that expensive car, and so on and so forth. Credit is a factor. Length of time on the mortgage is a factor. So someone that's getting a 15-year loan might get a much better interest rate because of the time frame than someone in a 30-year interest rate loan.
Put it this way: do we all have the same exact financial profiles? If I have a 623 credit score, does he have a 623 credit score? Did we put the same exact down payments? Do we have the same exact product? Most of the time, more than not, 9 out of 10 times, we probably have different credit scores. We're probably putting different down payments.
Right.
There's a lot of factors. Sometimes people even get seller's concession. Maybe that's why they didn't have high closing costs. So there's a lot of small details that you can't miss when you're going out for your mortgage loan. Actually, Marnel, I had somebody reach out to me, an agent, and they asked me, Mike, what is better? A person who makes $200,000 a year with unestablished credit, or somebody who makes $75,000 a year but has a long line of credit history, has a bunch of credit cards open, but you know what? He pays it all on time. Excuse me. But that's good, because that's what the bank wants to see. They want to see a track record. That's what institutions go off of, to see how you pay people back. Now, I even told the agent that, let's just say it was a person who was making the $250,000, but they had a 600 credit score because they were late. That actually sheds a light to how unorganized that individual is, because they're making this much income, but they're late on payments, so maybe they're managing their money the wrong way. So the person with the 75K would get the better interest payments because he always pays everything on time.
They're more qualified.
Yeah, they would be more qualified.
At the end of the day, money is just one factor of getting a loan. It's great if you have the income, but if you're unorganized and just not taking care of your finances, the bank will look at you as a very high risk in comparison to someone that maybe doesn't make that much more, but has all their finances in order. For the last 5 years, no latencies on their credit cards.
Balances are low.
Balances are low. They're not maxing out everything. So that's a big point, and that's a very good question that agent asked you, because it is something that we see every day, where someone says, wait, I don't understand. What do you mean? I have, my income's $200,000 a year. The world should open up to me. And the funny thing is, that's not always the case. The fact of the matter is, someone with that much money sometimes can get themselves involved in higher debt-to-income ratios that then hurts them. And if they're definitely not taking care of their finances on a month-to-month basis, it will absolutely have an adverse effect on the loan that you're applying for. So this is why we're
Well,
talking
Marnel
about
touched it right on the head. That's the golden word. That's everything to a bank. The word risk.
Yeah.
Risk. So they want to see a track record. I would say the three most important things when you go take out a mortgage loan, they want to see your reserves and assets, down payment, credit score, and income.
Yeah.
But all three of them have to be intact. You can't have one without the other.
Yeah.
So
we've definitely seen that where, you know, someone has 800 credit scores, right? And then they come to you but something else is kind of aloof in there. It might just be that they're piggybacking on their parents' credit cards that have been established for a very long time, and that's where that credit score is, and it's not truly their credit score. That's a lot to do with the pre-approval process. What it is that we're looking at to qualify you for this mortgage loan that you're about to apply for.
And you know, if you guys do want to know the secret, you do want to know how, hey, you know, well, Mike, how can I make my financial profile to a point where, you know, I do get the VIP treatment, I do get the best rates possible? Well, you know, if you read the fine print in most sites, they're gonna even say, you know, they want small loan amount, 25% down payment, 750 credit scores. So, you know, if you have like a juggernaut financial profile, then you know you're gonna get the same best favorable terms at any bank.
Right.
At any bank.
Yeah,
So.
and it becomes that. It's just educating yourself enough to know what you need to clean up. And it's not just, look, for us, we don't stop at just looking at that. If I see someone where their credit is just shy of getting the best possible loan, I will take the time with you, work with you, then do a rescore, which is just helping you to pay down a certain debt that maybe is maxed out and you have the funds right there to do. Just doing that will get you to the credit criteria that your friend was talking about of what they got. It's just going that extra mile to help out a client.
That's a great point, guys. You don't have to just call us when you're ready to necessarily shop for a home. Like,
No,
that doesn't have to be the time or point in your life. If you want to just do that, if you want to just call us and have a conversation of, hey Mike, how do I make my financial profile look beautiful? We can work on that. We could spend months working on that. You know, you don't have to call us necessarily because you know you saw a house on Zillow and like, oh, I need to speak to a mortgage banker right now. We can work on your mortgage. I prefer it that way anyway.
Yeah.
You know, you're taking the better steps. You're preparing yourself more for the home buying process, doing it that way rather than rushing everything into it or going off a picture.
You'll be better informed, better ready for the biggest decision that you're going to make in your life. Yeah. It takes just a little bit of time to speak to us, and we look at everything and put a fine product together for you so that you can then go out, and everything else is just a breeze. Finding that property will be a breeze after sitting down and actually getting your finances in order and knowing exactly what you're qualified for. So yeah, no, it makes all the sense in the world to look at it that way versus coming backwards.
So I hope you found that information useful, guys. Again, if you want to talk on getting, you know, your financial profile a little bit better than you have it now, please call either Marnel or I. And looking forward to talking to you guys soon.
Enjoy your day, guys.